Good morning, friends. Today, it's January 4th, 2023. Yesterday, Nifty spot closed at 18,234.80, just 20 paise below 18,235, the 50% Fibonacci tear level mentioned in the previous YouTube video. As we were articulating yesterday, both IT and pharma indexes were in decent green after a long time, and 2 more days of recovery and possibly weekly green close in these counters augur well for Nifty as a whole. As I've been telling repeatedly over last few days, Nifty is at extremely critical cat on the wall level junction, bit undecided which way to go. Domestic news is encouraging. India has got tailwinds. One, GST collections up 2.5% to 1.5 lakh crores. Two, India getting crude $30 below market price. India can actually become a big trading country, outperforming even OPEC by doing arbitrage, buying 30 USD less per barrel and selling high. 3. USD INR pair is a bit stable at 82.5 to 83 levels for quite some time. And there's a sustained US dollar inflow, both foreign FPI and remittances by NRIs. But there are a few headwinds too. One, current account deficit has ballooned to 4.4% of GDP, more than double the level which RBI was anticipating. This in spite of cooling of crude and India getting crude at deep discount and increased import duty on gold. Also, increased duty on import of steel. All these things are being done by the government of India, but still CAD is above 4.4, which is huge. Two, FIs have been selling even yesterday. FI counter saw cash selling of almost 890, 900 crore, I think. As far as participant data is concerned, one, FIs have sold futures for 7,407 crores, but have bought calls for hopping 87,909 crores. Two, and whereas retailers have future buy for 9,422 crores, but have sold calls for 132,359 crores, 1,32,359 crores. No, I was checking if this is true, but the NSE data says 132,359 crores. I don't know, surpassing FA figures by 45,000 crores by retailers. Overwhelming, isn't it? Above implies for biggies to make big money, expect stupendous increase in relative volatility timed to weekly expiry. One, big gap. It can be gap up or gap down, right? Like yesterday, Bank Nifty actually gapped down by 150 odd points, and within first minute, it shot up by 100 points, right? The same way, we can see big gap, bigger reversal to hit the stop losses. Two, both writers and buyers of the options have to be extremely careful because almost 2 lakh crore of option writing, that means 2 lakh crore of buying is also there, right? Is at stake. One good trade is what you require to start 2023. Like last expiry, this clearing also promises to give money for calls, puts, and asymmetrical 1:20 or 1:40 risk to reward. Remember last week 43,000 call from 6 rupee made a high of 262 rupees, right? There are 42,500 call from a 80 rupee odd made a high of 800 rupees. So we can expect big return call side as well as both side. So if you can analyze correctly, you will make the biggest money of the year. Keep these numbers and take risk at the edge. 1. If Nifty spot opens at 18161 and it's open low, long for 18236, 18278, 18343. 2. Blind buy any quantity, whatever the capital you have, of course with least stop loss or with proper hedge. If Nifty for some reason opens at 17954 levels for return of your lifetime and within first 10 minutes. Nifty is forming inverse head and shoulders pattern. As long as recent swing low is protected, expect all-time high soon. As long as the previous band 179752 1718118 is not breached on closing basis, you don't have to worry about any deep correction. But any close below 17975, you need to be a bit careful. Learn, analyze, be ready with the trade plan your trade your plan. You will succeed big time, and together we will reach the top. Wish you all success. Have a great trading day ahead. Take care.